Hey guys, what's going on? Jeb here, and in today's video, we're going to be discussing whether or not Bitcoin can actually hold the critical support around $8,000 that it is testing right now. As you can see, Bitcoin is attempting to put in a bullish engulfing candlestick to put a bottom in on this plunge that we've been in over the last couple of days, but that isn't necessarily the end of it. Guys, yesterday was one of the worst days in stock market history. The price of oil plunged in a way that it has not done in many years, and Bitcoin broke below some very important moving averages. So in today's video, we're going to be discussing whether or not Bitcoin can actually bounce and hold here, whether or not we're going to start a new uptrend and confirm that long-term inverse head and shoulders pattern, or whether Bitcoin is actually heading lower. I'm also going to be updating you guys on what's going on with the S&P 500 and oil, since we talked about that yesterday. I want to give you an update because we've had a little bit of a bounce, and I think it's very important right now that we understand how the rest of the economy is moving, because it's going to have major implications for the Bitcoin market. So we're going to be diving into all of that in today's video, and you're going to learn something, so make sure you watch until the very end. Before we dive on into it though, if you do enjoy today's video, make sure to hit that like and subscribe button. It really helps out the channel. Before we dive on into it though, guys, I do want to mention the Cryptocurrency Technical Analysis Academy, because the sale here on CT2A will be running through tomorrow. So if you've been thinking about joining the Academy, the nearly 1,400 of our students have gone through, I highly encourage you checking us out, the link in the description down below, and use this period in the market as a learning experience guided by CT2A. You're more than welcome to join our free Discord server down below and talk to some of our students, but without much further ado, guys, let's go ahead and dive right on into it. Guys, like I said in yesterday's video, there is a very important development going on in the global economy, and particularly, it's a pretty bearish one, as we've seen with the stock market pulling back nearly 20%. Bitcoin's pulled back below some very important moving averages. Oil is crashing. There's a pandemic going on. Is the world coming to an end? Is this the apocalypse? No, it's not the apocalypse. Calm down. Just seriously. Thank you, guys. You kept it pretty chill in the comment section yesterday, because I know there's a lot of people panicking right now. Maybe you guys just didn't comment. I just want you guys to be calm. Look, we've been through some crazy stuff. We're going to be through some more crazy stuff. What matters is not what's going on around us. What matters is what's going on up here. So make sure that you, as I like to say, keep your head screwed on straight, and we're all going to be just fine. Let's get into it. Guys, Bitcoin has had a pretty major development here over the last couple of days. In fact, Bitcoin, as you know, has had a pretty major correction, and from that correction, we broke bearish out of this rising wedge right here and pulled back yesterday to a low of $7,600. In doing that, we not only started converging bearish on the MACD once again, we actually put in a bearish cross on the weekly chart MACD, as you can see right here. And I'm not going to lie to you guys, I'm not going to sugarcoat it. That's not a good thing. The bull market that we were in, like in the process of forming, like I said, I kept telling you guys when we were up there at 10,000, we still haven't confirmed it. I want to see Bitcoin get above X level. I want to see Bitcoin do this. I want to see Bitcoin do this. And we didn't do it. There's a reason I kept calling for these confirmations, because we needed to see them. And since we didn't see them, Bitcoin is not in a bull market anymore. It's very important that you understand that you need confirmation, and we didn't have all of our confirmations yet, and because of that, we've been able to slide so far to the downside. At the moment, we're pretty far below the 200 daily SMA, which means that we are technically out of the bull market. I think we've been down here long enough to confirm that, unfortunately, but I should update you on that. Nevertheless, like I said, believe it or not, it is not actually the end of the world that Bitcoin is $600 lower than where it needs to be. In fact, it's really not that big of a deal at all. In fact, today, as you can see, we are putting in a bullish engulfing candlestick, as we mentioned in the intro. We had a red candlestick right here, and so far today anyway, our green candlestick is actually larger than the red one, making that a bullish engulfing. If it closes like that, that's actually a bullish reversal signal, and it might be an indication that we held $8,000, which is the critical level of support that we were talking about in yesterday's video. Why is $8,000 so important? Well, I'm so glad you asked. If we look out to the weekly chart, then we're actually here on the daily chart, we're going to find that $8,000 represents that shoulder line here on our inverse head and shoulders pattern. $8,000 is where we wanted to bounce if we were going to see this really long-term IHNS, which frankly is what I want to see. But of course, what I want to see doesn't matter what happens, and what the technicals say are what matters. So what do the technicals say? Well, the technicals say that there is very strong support sitting at $8,000. In fact, other than some of our trading down here around $3,000, that's actually where our VPVR climax lines up, is at $8,000. Not only that, guys, but remember the size of pullbacks during bull markets. We normally see between a 30 to a 40% correction. Right now, we've seen 28% correction. That is actually pretty healthy if we do manage to bounce, albeit it did break market structure, because in previous bull markets, Bitcoin would not go below the 200 daily simple moving average right here, but this is a different market, and there is going to be slightly different market structure. So it's not necessarily the end of the world that we fell below the 200 DSMA, so long as we get back up above it relatively shortly, and we very well may. We'll see what happens with the news. One major thing I want to point out here, guys, is the comparison between the 2015 and early 2016 stage of our previous bull market and the market that we're in right right now. Notice how once Bitcoin had all of its confirmations come in, we got above the 50 weekly, we saw Bitcoin have its golden crosses right here. Bitcoin entered a bull market. What happened immediately after we entered that bull market? Well, I'll tell you what happened immediately after we entered that bull market. We traded sideways for nearly a year. 210 days, about 8 months. And after that, what happened following that? We had another rally. It was 80%, pretty nice, albeit 4 weeks, and then we traded sideways again for another 200 days. The first portion of the 2016-17 bull market, the first pretty much half or even more than half of 2016, Bitcoin was relatively flat. And the reason I'm bringing that up is because maybe everything that we're seeing right here after this major run-up is simply consolidation moving into the beginning of a new bull market. Maybe we see something similar happen right now as we saw in the previous bull market, where Bitcoin will correct a little bit, rally in this kind of weird cup and handle kind of formation, and then maybe towards the end of the year on into 2021, we'll start seeing those highs be reached again, and Bitcoin will start running back to that all-time high figure. And the reason I'm bringing all this up in this video is because perhaps that is going to happen as a result of this inverse head and shoulders pattern right there if it does play out. If it doesn't, then perhaps Bitcoin pulls back down here to the 100 weekly simple moving average, which is basically a 2-year moving average, and see where we bounce from there. By the way, guys, the point I'm trying to make here is that no matter what happens with Bitcoin, there is still a path to bull market, because you have to realize our previous low was down here around $3,000. Our more recent low was up here around $6,000. That tells you something, doesn't it? That tells you that we're making higher lows. So long as we don't go back below $6,000, we're still in somewhat decent territory, even if all of the short-term technicals don't necessarily line up with the way the previous bull market was formed. Maybe this one just forms a little bit differently. We'll see what happens with not only Bitcoin, but with the global economy. Right now, it's hard to make long-term and accurate predictions on Bitcoin, as we don't know exactly what's going to happen with the rest of the economy. And we know that there is a major correlation between Bitcoin and the S&P 500, along with the rest of the global economy. Before we get to the global economy, though, there is one more thing I want to talk about, and that would be the 20 EMA, because right now, guys, the 20 EMA is crossing below absolutely everything. We saw our bearish cross right here. We're going to see another bearish cross relatively soon, and then we're going to see the 20 cross below the 100. So we're seeing a series of 3 consecutive bearish crosses in the span of about 2 to 3 weeks, which kind of sucks and is probably going to help push Bitcoin to the downside. But like I said, guys, the level to be looking at right now is $8,000. Do we hold that? Do we not? Do we bounce? Do we rally? Do we crash? I want to answer those questions, and from there, it'll be much easier to get a good idea of where Bitcoin is heading. With all that said, guys, let's go ahead and take a peek over at the SPY. Market just opened. It is 9:57 in the morning. You can see the time where I'm recording this right down here. That is Eastern time. And the market actually opened significantly higher today. I saw that and I was encouraged by it, because the S&P 500 opened around 282, which is definitely better than where it opened yesterday. I think we can all agree on that. But guys, yesterday's candlestick, if we look from wick to wick, pulled us back about 19.5%. We got very close to that danger zone, and we definitely don't want to see the S&P go much lower than that. Is it going to? Well, guys, the thing is, most of this correction in the S&P, in my opinion, has to do with fear about what's going on in the world right now, rather than necessarily the news itself. And as you guys may know, Italy just locked down their entire country. So, guys, the reason I bring that up is because the fear and the FUD and the despair and the people running around like chickens with their heads cut off with losing their head, that is not necessarily over. And since that's not necessarily over, the correction on our markets can't necessarily be over, because much of this correction we have seen has come from those people freaking out. Wait until the news gets hold of it again and keeps making a big deal about it, especially if this gets big in America, and 20% might not look like that much compared to what we may be putting in here in the next couple of months if this continues in the way that it is. So guys, keep an eye on the S&P, and also keep an eye on its weekly chart, because I think we're pulling back to 263 around that level, which would be the 200 weekly SMA. And again, the reason I bring all of this up is because the S&P is very, very highly correlated with Bitcoin. What the S&P does, Bitcoin normally follows. You can see evidence of this right here, because when Bitcoin has a correction, so too is the S&P. And we even saw some of that happening back in November of 2018. When Bitcoin was having a major correction, it corresponded to that major correction that we were seeing in the S&P at that time. Right there. So guys, is there a reason to panic? No, there's very rarely a reason to panic. Is there a reason to be cautious? There's most certainly a reason to be cautious. Is this a time to go and try and catch a falling knife? Not necessarily, because I'm not convinced that this is over. We shall see. Anyway, I'm going to update you on oil real quick, and we're going to go ahead and wrap the video out here. Let's go ahead and look at that. As you guys can see, Brent crude oil pulled back very, very steeply yesterday. Literally one of the biggest pullbacks in the last few decades. We saw a 34% reduction in price of a barrel of oil, and we have seen that start to bounce a little bit over the last few days. Now, you have to understand something, guys. Oil is literally the liquid that drives the global economy, at least for the next 20 or 30 years. And what happens on oil is going to have major impacts on OPEC countries. It's going to have a major impact on American shale producers in and thereby the rest of the American economy, and it's also going to have a big impact on Russia, because Russia is trying to engage in a price war, which quite frankly, they can't sustain. Oil prices are more than likely going to recover by the end of the year, but it is going to leave a bit of a bruise on the global economy, which is not really what we need right now, quite frankly. Thank you, Russia. And by the way, I'm joking on that. Russia was acting out of their own self-interest. That's all you can expect from a country. I'm not real. I mean, that's fine. I get that. Anyway, guys, to conclude, Bitcoin is in a bit of a precarious situation right now. If we bounce from $8,000, then this pullback may have been actually one of the most bullish things that could have happened to Bitcoin. But if we do fall below $8,000, then we're probably seeing Bitcoin pull back to at least $7,200, around some of the moving averages that we discussed in yesterday's video, and we might be going back to $6,000 something if we pull back below even there. A lot of what happens on Bitcoin and the rest of the global economy is going to depend on what's going on with the oil market, and most importantly, what's going on with the news of the coronavirus. As you guys know, as I just showed you a second ago, Italy just locked down the entire country rather than just the region of Lombardy. And to address something that a lot of people say, yes, the flu has killed more people this year than the coronavirus, but even if we are overhyping our response to the coronavirus, which I most certainly don't think we're doing, look at the economic impact that the virus has had compared to the one of the flu this year, and you start to realize which one is more important to be paying attention to as far as markets are concerned. And that is a very obvious conclusion to draw, at least in my opinion. Tell me what you think about that in the comment section down below. We're entering a period that a lot of people would have called the day after. What was the most united time that America has had in the last 30 years? September 12th, 2001. What was the most united time that America has had? Probably right after the Revolutionary War was won. Unfortunately, in large part to the internet and the political divisiveness that we've seen in our country and in many countries over the last 30 years or so, and the increase in that, the country that I live in, America, and the country that many of you guys live in have become increasingly divisive, and that's a very sad thing, but it is definitely a fact. It is times like these where everyone hopefully comes together to fight a common enemy that we can see our humanity come out. And I'm hoping that we see a lot of good come from what is going on in the world right now, as well as a swift recovery from the sad economic and humanitarian fallout that we are experiencing. I think in the end, as far as what it'll do for the fabric of our society, as well as for our protection for ourselves, in the long run, what is going on in the world right now may actually be a good thing if you weigh the pros and the cons from a strictly pragmatic and cynical method. It's terrible, but hopefully some good and a silver lining will come from it. All we can do right now is be careful of catching falling knives, be careful of getting our positions absolutely wrecked, make sure that we have US dollars and cash on hand, because unfortunately, if the global economy does have a major pullback, people are not going to be wanting to accept Bitcoin, at least not yet. It is important to still have some fiat currency to operate in the current world. Make sure you're protecting yourself, make sure you're washing your hands, and of course, make sure you're staying up to date and learning about the markets every single day, because it's a very good way of being kept up to date on all of this anyway. And in the theme of learning, guys, that is why CT2A is on sale, and that sale will be ending tomorrow. Like I've said, guys, there's nearly 1,400 students in the academy at this point, and they are loving every minute of it. If you guys want to learn about how to actually research and do technical analysis on these markets, that's a very good thing that you want to do, and I would heavily encourage that whether you go through our academy or not. But if you do want to learn it, I know, because I've been working in the market for 3 years and I've seen the testimony of my students say that this is one of the best ways to learn the markets in a very quick way. There's 11 hours of content in here. Instead of spending the next year and a half trying to learn all of the information that's in here on your own, you can join us and you can learn all of it by the end of this week. There's a 14-day money-back refund guarantee, and I encourage you, if you think you don't want the academy, join anyway, and if you don't like it, I'll send you all your money back. Shoot me an email with the word refund in it, and you will get it all back, and you won't even have to worry about it. But I don't think you're going to do that, because I know you're going to get a lot of value out of the academy, and I also know the refund rate of our academy, which is ridiculously low. So guys, if you want to help to support the channel and also help to support all of the growth that we've been doing lately and all of the good things that we've been doing lately, I highly encourage you to join the Cryptocurrency Technical Analysis Academy with the link in the description down below. That sale will be running through tomorrow, so make sure you join now so you don't miss it, and you will get access to all current and future video content that is uploaded to the course. Anyway, guys, this is my time to go and record the Coffee and Crypto live stream. I am the boss lady this morning, as my mug would say, and I am very much looking forward to chatting with all of them over there. If you want to join us, the link for that's in the description down below. Those are two different things, by the way. But anyway, guys, like I said, keep your head screwed on straight. Don't run around like a chicken with your head cut off, and make sure you keep your emotions out of your trading, and you're gonna be just fine. But like I said, guys, that is going to wrap it out for today's video. Before I go, though, I do first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.